how could this be the early stages? We're at record highs, and it's been going for like 10 years now.
Well, Dom, in a cyclical sense, if you just look what's coming down the pipeline, you've talked about it all morning, the fiscal stimulus, the monetary stimulus, the vaccine rollout, the service economy is going to come roaring back in the second half of this year. Europe's a laggard now, but that will come as well. So when you kind of look across the board, it makes perfect sense to keep money in the cyclicals, whether it's financials, energy, materials, and industrials. We still have a ways to go here with this rally.
So if we have a ways to go, I mean, I'm not trying to be skeptical because I don't know. I'm one of those people who has mutual funds in a 401k somewhere, and I look at them periodically, and they keep saying that they're going up in value. What exactly is going to be the driver? You mentioned the fiscal side of things, but we're in earnings season right now. But this is like the earnings season over the last couple of months and quarters where I feel like we don't even focus on earnings anymore because everything is COVID and everything is stimulus and everything is monetary policy. When do corporate fundamentals matter again, and will they carry us into that next leg of the bull market?
Well, Don, they always matter, the corporate fundamentals. When you look at the operating leverage the corporations are doing right now, and all that's falling to the bottom line, that's going to continue. And what's unappreciated in the markets but comes out in earnings is how well corporate America, even small companies, have managed their way through the last 12 months, with what's working from home, increasing their digital capabilities, more automation. Now, there's some bottlenecks. You know that. Chips, aluminum cans. They're going to pass as well. So we get through the bottlenecks. We continue to increase operating leverage. That's going to be a key driver, kind of a micro bottoms-up sense that keeps this rally going.
What are the most important parts of the market right now? We've always mentioned that it's, mega cap technology, communication services, the FANG type stocks, Facebooks and Alphabets and Apples and that sort of thing. Mathematically, I know why, because they're the biggest weighting in the S&P 500 and NASDAQ. But what in your mind is going to be the most important part of the market that will kind of drive the next leg of this bull market?
Well, Don, there's a lot of optimism around the green economy. And if you look at the battery metals, whether it's copper, nickel, cobalt, electrical vehicles, solar, wind, that's got to be backed up by the infrastructure bill that's going to be out there later this year. So if we don't get that, if it gets tied up in Congress, that could be kind of a headwind for later on. But there's a lot of optimism. So we're kind of we're looking at the optimism and looking at the risk at the same time and say, okay, when do we want to be participants in this rally? So I think that's number one. And number two, we've got to get the labor, the labor market up and running. And as I said earlier, the bottlenecks, the chips, the aluminum cans, that's what we need to work through that. I think we will work through those bottlenecks, and then we're going to see much more upside for earnings.
I mean, the infrastructure plan, you brought it up, so I'm going to follow that. The infrastructure plan, I mean, the biggest one that we saw in recent memory was the American Recovery and Reinvestment Act in the wake of the great financial crisis. We know people said that wasn't exactly maybe the most efficient way to get money out there. I can think back to the massive one that was the Eisenhower Interstate Highway System. What kind of infrastructure plan will it take to kind of get that conversation going again? We talk about infrastructure with every presidency, but it rarely ever happens.
Yeah, rarely. You're right, Dom, and we're still going to build that third tunnel between New Jersey and New York.
Right.
That conversation. Yep. This one is going to be different, I hope, because when you talk about the green revolution, the green infrastructure, it's really about how to compete with China. It's really about global competitiveness, whether it's using these technologies to drive a cleaner environment, to drive growth, and really good paying jobs. So it's going to be more, I think, like the interstate highway. That's the conversation we should be having. That's the conversation when we have talking about, develop an infrastructure bank and issue some long-term bonds, like 50, 100 years. That's the conversation we want to see. And if that happens, then we're really in place to see more upside in this space. Maybe it's overbought right now, but it'd be undervalued if we get the big projects.
All right, Joe. So let's talk a little bit about maybe a balanced amount of pessimism here. What exactly is the biggest worry that you have about what's going to happen, and how deep could any pullback really get?
The biggest worry, Dom, is we wake up one day and consumer prices or raw material prices really catch up, and we see the whites of the eyes of inflation. We've got a whole generation of investors out there. They don't know what inflation is. They don't know what the Fed funds rate can actually be. They think of home mortgages. If it's above 3%, that's costly. So to me, the biggest issue is overheating, a backup in inflation that surprises the market. And then you've got the Fed back in there talking about tapering. I think that would be a significant headwind. It's something we've got to watch because, as you've mentioned, the fiscal monetary stimulus that's coming down the pipeline, it's unprecedented in the last couple of decades.
Shepard Smith here. Thanks for watching CNBC on YouTube.